Investors brushed off geopolitical concerns in the fourth quarter, sending U.S. equity markets to record highs. Emerging markets and Asia in general were the top performing region, followed by the U.S. and then international developed markets. Given investor enthusiasm, it's no surprise that the higher beta sectors such as the resources, technology, and consumer discretionary were the top performers, returning roughly high single digits in Canadian dollar terms, whereas the more defensive sectors, healthcare, telecom, and utilities were roughly flat. The Global Equity Fund performed roughly in line with the index, led by U.S. consumer-facing names such as Intercontinental Hotels, Nike, Sherwin-Williams, and AutoZone, whereas a lack of exposure to the mega-cap tech names Amazon, Microsoft, and Apple hurt our relative returns. In terms of recent transactions, we sold the Tractor Supply Company as we felt investment in online or e-commerce was going to increase at the expense of capital being allocated to increased number of stores. So we saw a decline in the return on invested capital in the near future. The proceeds went to purchasing Alphabet, the parent company of Google, which is clearly a dominant online force with many multi-billion user platforms, a strong growth profile, dominance, excellent management team, and a track record of great capital allocation. In terms of the current positioning of the fund, as always, derived from bottom-up stock selection, but we are currently overweight emerging markets, the UK and Switzerland, while being underweight Japan and the Eurozone. In terms of sectors, we are overweight industrials, while being underweight energy, real estate, and the utilities. In terms of a market outlook, it would appear that valuations are relatively stretched at this point, and with the threat of rising interest rates, it's unlikely that we will see multiple expansion. There does appear to be a fair amount of speculation in the market, whether you see that in cannabis stocks in Canada or whether you see that in cryptocurrencies around the world. But we do think our focus on very high quality companies leaves us in a very good position to withstand any type of choppy market or any checkback in the market. We are very long-term oriented, and we do think we have displayed very good down market capture. In other words, we do well when we get into risk-off markets. And we do appreciate your attention for this video. Thank you.